The S&P 500 and NASDAQ closing at all-time highs.
The S&P hitting a new all-time high on the heels of the G20 meeting. This just after the index closed out its best first half of the year in more than 2 decades.
So how do we passively invest in the US market here in Australia and take advantage of the high growth tech stocks of the S&P 500 and the NASDAQ? Or maybe you've heard of ARK Invest and you want to invest in Cathie Wood's ETFs to track innovative companies and disruptive technology. In this video, I'm going to cover how we can buy these ETFs here in Australia and what brokers we can use that I think are the best value for investors, especially for broke millennials like myself who can't afford to spend much on brokerage fees. So let's get into the video. Welcome back everyone, my name is Senan and this is Investing IQ. If you find this video useful, please consider supporting the channel by hitting that subscribe button. So essentially there are 2 ways you can buy shares or ETFs from the US here in Australia. You can buy Australian domiciled ETFs, which are ETFs that are comprised of US stocks, but they're listed on the ASX or the Australian Securities Exchange, and they're priced in Australian dollars. Basically, when an ETF is domiciled in Australia, it's treated like any other regular shares that you can buy on the ASX. And the only tax implications are the regular Australian capital gains tax when you sell. In a previous video, I named some of my favourite Australian domiciled ETFs. So if you wanted to check that out after this video, I'll put a link down in the description box. The other way we can buy and sell US ETFs here in Australia is through brokers, but more specifically a broker that allows international trading. Now, when you're choosing an Australian broker to trade US shares with, there are 3 important factors you need to consider before signing up. The single most important thing is fees. Always compare the fees for different brokers so you can find the best deal. Some brokers charge really high fees compared to others, and high fees can destroy your returns over the long run. So always be really picky with your brokers. The second thing when choosing brokers, and this is a personal preference, I always pick a broker that allows fractional share trading. So what does that mean? Essentially, fractional share trading is when a broker allows you to buy a part of a share. So let's say I wanted to invest in Amazon or Google. On brokerages that don't trade fractional shares, I would have to front the money for a whole share, which is over $3,000 for Amazon and $2,400 for Google. So for poor millennials like me, I need to be able to buy fractional shares so I can invest like $500 or $1,000 at a time. The last thing to consider when choosing a broker, and this is a huge thing for passive investors, is an inactivity fee. Some brokers charge a fee if you don't place a certain amount of trades every month or every year. So for passive investors, you may invest in some ETFs and just leave it to hold for a very long time. Or you might be dollar cost averaging and only investing once or twice a year. And passive investors can really get stung because the inactivity fees will accumulate over time. And because a lot of the time they have a set it and forget it strategy, they won't even realise until it's too late. Now, I initially made a list of some brokers in Australia that offer international trading. But when I was reviewing their fees and seeing if they checked the criteria that we just spoke about, one of the brokers was a clear standout in every single category. So I thought, why not just show you what I think is the best broker for US trading in Australia. However, if anyone finds another broker in Australia that's really solid, let me know in the comments down below. So the broker we're going to be looking at today is Stake. Now, I'm not sponsored or affiliated with Stake in any way, I just really love their brokerage and their low fees. Unlike most brokers, Stake charges 0 trading fees when buying and selling stocks and ETFs. With Stake, the only fee that you pay is the foreign exchange fee, which happens when you transfer money into your account and it changes your Australian dollars into US dollars. Again, they're competitively priced compared to other brokers at 70 basis points or 0.7%. Stake also allow fractional share trading, so no matter how much capital you have to allocate towards different stocks and ETFs, you don't have to worry about buying the full share amount or a minimum buy quantity like other brokers have. Another thing that's really cool about Stake is that when you create your account, if you fund it within 24 hours, they'll give you a free stock of either Nike, Dropbox or GoPro, just for funding your account. You can also refer your friends and get a free stock for the both of you for every person who signs up using your referral code. If you guys end up signing up with Stake, I'd really appreciate it if you use my referral code and we'll both get a free stock. So let's take a look inside and see how it works. If we go to search, we can look for different US stocks and ETFs. If we search for index, it will bring up lots of different ETFs that track the general market. So we have the Vanguard S&P 500 ETF, QQQ, which is Investco's NASDAQ 100 ETF, VTI, the total US market ETF, the BlackRock S&P 500 ETF, and many others. Make sure to check each fund's fees before investing because Vanguard, Investco and BlackRock all charge different fees for passively managing the ETF. If you wanted to invest in Cathie Wood's ARK ETFs, Type in ARK and it will bring up all the different ARK funds. Because these are actively managed ETFs, they have a slightly higher fee than the passive ETFs that track the general market. But all of that information is on ARK's website, so if you're interested in ETFs that track disruptive technology and innovation, I'd highly recommend checking out their page. As always, do your own research, but if you do end up buying some ETFs, let me know in the comments down below. Okay, the last thing we need to cover are the tax implications for Australians investing in the US. If you're investing in Australian domiciled ETFs, you don't have to worry about it because they are based in Australia. But if you're investing directly in US ETFs or stocks through international trading, then you'll need to complete a W-8 BEN form. Essentially, it's just a form you fill in with your broker for the IRS in America to let them know that you're a foreign resident. And that way you don't have to pay tax in the US when you sell your shares. And you also only pay 15% tax on dividends instead of 30%. Now with Stake, they fill in the form and file it on your behalf and charge a one-time fee of $5. With other brokers you may have to fill it out yourself, but always make sure you check if your account has a completed W-8 BEN form before you invest in US shares. If you've watched the video all the way to the end, thank you so much for watching. If you found this video useful or if you learned something new, please consider supporting the channel by hitting that like button, subscribing to the channel and giving that little bell a tap so you get a notification whenever I release future videos. As always, this video is not financial advice, it's just my opinion for entertainment purposes only. And you should always do your own research before making any investment decisions. That's it for this video. Thank you so much for watching and I'll see you guys in the next one.